Good morning. Those are the top headlines that we are tracking on Power Breakfast today. In the Mumbai News Center, I'm Sonal Bhutra. And while we talk in detail about whatever we are tracking today, let's take a look at the top headlines and the Asian market action as well. The Asian markets are largely mixed today. Remember, US markets closed mildly in the green. Yesterday, those markets did not do so well. However, it's largely red than green on the Asian screen. The Taiwanese index is down 0.1%. Hang Seng also down by similar levels. We have Straits Times sitting with cuts of 0.5%. However, it's Nikkei which is managing to be in the green as we speak. It is up 0.1%. And the SGX Nifty, as a result of all this, is indicating that maybe the start for our own markets could be in the red. It's a downtick of 32 points that the SGX Nifty is indicating. But remember, yesterday as well, it was indicating a start in the red, but we did see some recovery from the lows. So we'll have to see whether that happens today as well or not. But for now, it's a red tick as far as SGX Nifty is concerned. In the US markets, Wall Street ended Thursday's trading session with marginal gains. The Dow Jones ended 20 points higher, the S&P 500 flat, and the Nasdaq Composite closed with gains of 27 points. CNBC's Sarah Eisen gets us a wrap of all the action on Wall Street.
Markets mostly flat today as investors weighed new information on employment and home sales. Retail earnings also offered insight into the health of the consumer. The Dow rallied late to finish just about unchanged. The S&P 500 was positive for the day, about 0.2%, and the Nasdaq was also up about the same. New numbers out today signal that the housing market has entered recession. Sales of previously owned homes fell nearly 6% in July compared with June, and sales dropped about 20% from the same month a year ago. Despite demand falling off a cliff, supply remains tight and prices remain high year over year. And some of the largest labor unions in the airline industry have launched a campaign against airlines buying back their stock when pandemic aid ends in the fall. A ban on stock buybacks was a condition of the $54 billion in COVID pandemic aid that the airlines received. The unions, which represent more than 170,000 pilots, flight attendants, and customer service agents and other industry staff, are urging carriers to stabilize their operations and invest in their workers before spending on buying back their own stock. That's the action from the U.S. market. Back to you in Mumbai.
Okay, that's the US market action. But in fact, let us also get in some important market opinion coming in from Katrina Simonetti of Morgan Stanley Private Wealth Management. Listen in.
We still need to get through some pain and through some market volatility because the earnings and the economy and the possibility of the recession is something that has to be considered and will play a big role into the Fed decision here. It is hard to ignore that the market is rallying and seemingly ignoring high inflation, lower consumer confidence, geopolitical risks that are out there, weakening economy, the decelerating earnings. All of this is still there, and it will take some significant improvement in inflation and improvement in consumer confidence and in the earnings in us to be firmly into the bull market territory.
All right, that's the global market action. But how will these overnight cues impact our own markets? We have a research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. And looks like they both are in the Friday mood today. Hi guys, a very good morning to both of you. First up, Sonia, let me come across to you. What is the market setup looking like today?
Well, I don't know about myself, but Mangalam is definitely in the Friday mood today, which is great, right? I mean, it's the start of a weekend, time to perhaps cheer.
Yes, always in a Friday mood.
Okay, so I'm going to quickly wrap up with the market expectations for today. The market has had a great run so far. If you look at it, the Nifty is now up almost 5% in August, and the mid-cap index is up about 6%. But purely for today, if you look at it, the US markets ended absolutely flat. It was a minor positive that you saw. The Dow was up about 20-odd points, Nasdaq up about 30-odd points. The S&P 500, in fact, by the end of this week, will aim at, having a fifth straight winning week. So the bulls are really in absolute control of this market. Brent crude has risen above $96 a barrel because fuel consumption has picked up and there are some supply issues as well. So keep an eye out on that. For our own markets, FI sold yesterday. So FI sold about 1,706 crores in the cash markets and DIs bought about 471 odd crores. As I said, that the market has been a buy on dips market for the last many days. Even yesterday's trade, the Nifty actually gained 104 points from the intraday lows. So perhaps today, even if we might see a slightly tentative opening, the market will use every opportunity to buy into the dips, especially in some of these banking stocks, IT names, etc. Remember, the Nifty is now just about 3.6% away from an all-time high. So it's just a matter of time before the all-time high gets hit. But purely for today, the SGX Nifty is suggesting not a great opening. It's down about 25 odd points, but the dips could perhaps continue to get bought.
Okay, and that is about the markets, but a lot of stock-specific action as well, Sonia.
Yes, plenty of stocks to watch out for. I'm looking out for, all these oil-based stocks, ONGC, Oil India, etc. The government has reviewed the windfall gains tax. They've cut the cess on crude. The export duty on ATF has been hiked. Export duty on diesel has been restored. So do keep an eye out on that. These are the couple of stocks to look forward to. Adani Total Gas also in focus, as the company has reduced CNG prices by 4.7 rupees per kilo and PNG prices by 3.2 rupees. NHPC has signed an MOU with the Nepal government for preparation of a development of 2 hydropower projects. So that's a positive for them. Tata Consumer Products came out with a note in one of the pink papers that they expect their food business to generate significant profits over the next 3 years. And this is a stock that has been gaining ground lately, so I'll keep an eye out on that. Metropolis Healthcare, the CEO resignation was something that was announced earlier, but of course this comes as a setback. So Vijender Singh has stepped down as CEO. We'll keep an eye out on this stock. In any case, diagnostic stocks have been under pressure for a while.
Okay, all right, Sonia, thanks a lot for that. And finally, Manglam is joining in with all the cues from the FNO space this morning. Hey, Manglam.
Good morning. So, like Sonia pointed out, the SGX Nifty is indicating a softish start, and bulls would actually like that. The reason for that is because dips have been bought into. Yesterday as well, we saw a dip at the open. We were in the red for most part of the day, but the Nifty bounced about 100 points from the lows of around 17,850, and that becomes an important support mark. In fact, in doing so, the Nifty is ended higher for the 8th straight session. So that's the kind of momentum that we're in. The FIIs, they sold in the cash markets almost 1,700 crores, so that for the record books broke their buying streak. But if you look beneath the surface, there was that big block deal of Sona BLW where Blackstone sold over 4,000 crores. So if you adjust for that, there was actually a purchase in the cash market by the FIIs in excess of 1,000 odd crores. But where the FIIs are trimming their positions are in index futures. They sold close to around 1,652 odd crores, where they unwound 8,400 long contracts and added almost 10,000 short contracts as well. So in doing so, in the expiry week, which is next week, the FIIs are now 53% long and 47% short. Some balance is something that would be good. Where did we see the action in terms of options? 18,000 call continues to see a fair amount of writing. So that was the one that saw 31 lakh shares written for a premium of 100 rupees. So maybe levels upwards of 18,000 may face near-term hurdles. 17,900 call was pretty active as well with a premium of 175. In fact, as was the 17,900 put, we saw almost 30 lakh shares added out there for a premium of 100 rupees as well. So maybe the street is playing for a range between 17,800 to about 18,000 odd. Tata Chemicals is the stock that I'll be watching out for. It's exited FNO ban. And apart from that, we did see a fair amount of short covering on IRCTC as well as India Cements, IRCTC and India Cements. Of course, IRCTC, there was a news backing that. So let's see whether that comes about or not. And a lot of long positions being unwound on SBI cards and IEX because of some regulatory uncertainty on both of them. So let's see where these stocks go to.
Hi, welcome back. You're watching Power Breakfast on CNBC-TV18. Well, to the big news that we got overnight, windfall gains tax that is revised in the third fortnightly review. Government now has cut cess on domestic crude by 4,750 rupees a ton, and they have raised export duty. So now the cess on crude has come in at 13,000 rupees per ton versus 17,750 rupees per ton earlier. Additionally, what the government has done is that they have come back with the export duty on ATF from nil to 2 rupees now. The export duty on diesel is hiked to 7 rupees versus 5 rupees per litre. Export duty on petrol still stands nil, and it is effective from today, that is 19th of August. Now, it has come as a negative surprise that they have increased export duty on ATF and diesel. ONG for CLSA has written a note, and where they say that this particular cut that they have seen in the cess on crude oil implies post-tax realization of $77 per barrel versus $76 per barrel previously, and around $71 per barrel in the first 2 fortnights. So there has been an increase, and they also say this raises the confidence that government is okay with realizations around that $75 to $80 per barrel mark. And this is more positive because the fact that ONGC and Oil India are pricing in only $50 per barrel as realizations if we go by their valuations currently. However, of course, it's a negative surprise that the export duty has been increased on both ATF and diesel as well, and this despite the fact that there is a $2 per barrel decline in refining margins from the last time they actually changed the export duty on these two counters. This will increase the impact of windfall taxes on Reliance Industries by $0.7 per barrel to $2.2 per barrel. So it would be negative for Reliance Industries while it is positive for ONGC and Oil India because there is continuous decline in crude cess as far as these companies are concerned. So that is about the oil and gas space. Let's talk about macros now. The Reserve Bank has struck a note of caution on the privatization of public sector banks. In its monthly bulletin, the RBI has said that public sector banks have performed better on financial inclusion and labor cost efficiency. Sapna Das joins us now with more. Sapna, what's the RBI stance?
Well, in one of the articles published in the RBI's August Bulletin, it talks about an alternative perspective to public sector bank privatization, and it makes a very strong defense of the role of PSBs in the economy. First off, the article talks about the fact that how the private sector banks are always more focused on profit maximization, whereas the PSBs have a larger role at play. Social sector social sector obligations like financial inclusion, and that's what they have carried out beautifully. That's one. Second, also in terms of the monetary policy, the private sector banks have always found to be more pro-cyclical, whereas the PSBs have played a more counter-cyclical role, So that's an important point. That's an important highlight that comes through in this article. Last but not the least, it talks about the various steps that have been taken by the PSBs over the last 2 odd years in terms of improving their balance sheets, finally. Also it was suspected that PSB's balance sheets are pretty weak and they'll be badly impacted by the COVID. But the article actually notes that they have weathered the storm really well, remarkably well. So that's a good highlight going forward. All in all, it makes a very clear case for the political executive that they should not be looking at big bang public sector bank privatization because that will do more harm than good. But we also need to note that at the moment the government really has not moved forward on the bank privatization agenda. For example, the bill was expected in the monsoon session of Parliament. There's no word on that as yet, and we really don't know whether this is going to be in a limbo till the general elections in 2024. So the research paper of RBI makes a very valid point. However, we also need to note that the political executive is not really moving forward on this front, at least as of now.
Sapna, thank you so much for joining us with all those details. So that's the word coming in from RBI. For now, we'll do one thing. We'll slip into a short break now. But before that, let's hear out Tata Power's MD and CEO Praveer talking about how the company wants to educate people to fast-track the adoption of green solution. Let's listen in. Hi, welcome back. You're watching Power Breakfast on CNBC-TV18. Well, as always, let's get you an update on the commodity space now. Manisha Gupta is joining us. Hey, Manisha, good morning.
Hi, morning. I'm looking at the crude oil prices where we are extending gains for a third straight day today. The U.S. crude inventories declined by 7 million barrels clearly has been supportive, but the markets are reading into the next data as well. The U.S. exports have hit a record high of 5 million barrels per day. The gasoline demand in U.S. is at a one-year high, so those numbers clearly supporting the prices. Having said that, we still are headed for a weekly decline, but that's narrowed down to 1 to 1.5% now. Another important statement really comes in from OPEC Secretary General, who hints at supply cuts if the prices fall further. Remember, the next OPEC and allies meeting is on 5th of September, and the markets are expecting more than just the ordinary in this meeting, and that could be keeping the prices jittery here. Also, Russia forecasting rising output and exports till the end of 2025 seems to be supporting the crude oil prices, is the reason we are back above $90 per barrel for both the varieties.
Okay, all right. So Brent in focus today again. Manisha, thank you so much for joining us with those updates. Moving on, in June this year, the government hiked the minimum support price for all 14 Kharif crops on average. The hike ranged from 4 to 9%. But when CNBC-TV18 Sandhya Gora visited Maharashtra Vidarbha region as part of our What's Ailing Rural India series, farmers told her that the new MSP is not proportionate since it now equals production costs prevailing 3 years ago.
Narendra Modi government came to power on the promise of doubling farmer income and says one of its key initiatives to this end has been hiking the minimum support price for 23 crops every year. Remember, the minimum support price, as the name suggests, is the least amount farmers can expect when they sell these crops to the government.
This year, the government raised the MSP on all 14 crops for Kharif season. The MSP was raised by 4 to 9%. The government claimed that the step was taken to boost farmers' income and to encourage crop diversification. Paddy, tur, moong, cotton and soybean were among those 14 crops. And to find out if the raise was proportionate to the escalated production cost for the farmers, we spoke to the farmers of Amravati, a region known for soybean farming.
37-year-old Manish Bansal is one such farmer. Like he does every year, he has sown soybean on his 4-acre ancestral farm, and going by the latest MSP, he expects 4,300 rupees per quintal of soybean, higher than the 3,900 rupees per quintal last year. But he is not impressed because the new price does not even cover his cost of production.
महंगाई के हिसाब से कम हो रहा है, जैसे कि मजदूर के भाव बढ़े हुए हैं, डीजल के भाव बढ़े हुए हैं, ट्रांसपोर्ट के भाव बढ़े हुए हैं और खाद के भाव बढ़े हुए हैं, वो हिसाब से एमएसपी कम हो रहा है। जैसे कि 1 क्विंटल के हिसाब से 4500 रुपये खर्चा 5000 तक का खर्चा आता है। सरकार का मिल रहा है 4300 रुपये, वो कम मिल रहा है हमें।
It's not just small farmers who are facing the pinch. Even large farmers who have the advantage of scale and access to better technology are also looking at losses despite the MSP hike.
एक्चुअली ये जो कॉस्ट है, एमएसपी जो है पर क्विंटल जो है, वो 3 साल पहले जो हमारी कॉस्ट थी उसके साथ मैच होती है, मगर आज जो हमारा कॉस्ट ऑफ प्रोडक्शन रेट जो है वो बढ़ चुका है और आज हमें 1 क्विंटल के पीछे कम से कम 5000 रुपये का खर्चा ही है। और जब तक कि हमें 5,500 6,500 रुपये एमएसपी गवर्नमेंट देंगी नहीं, तब तक के किसानों को ये बिल्कुल लागू नहीं हो सकता है।
Farmers say that the MSP escalation does not take ground realities into account or factor in input shocks like the rise in crude oil prices or the war in Ukraine, which has disrupted supplies. Till last year, a 30-kilogram bag of soybean seeds used to cost 2,200 rupees. Now it costs between 4,000 and 4,500 rupees. Fertilizer costs have also risen sharply. A 50-kilogram bag of DAP or diammonium phosphate fertilizer, which used to cost 1,180 rupees last year, now costs 1,380 rupees. And the slightly less expensive mixed fertilizer cost 1,750 rupees for 50 kilos against 1,150 rupees last year. Prices of the even cheaper 50-kilo bag of potash has more than tripled from 550 rupees to 1,750 rupees. Labor costs have also risen from between 125 and 150 rupees per day per labor to between 200 and 300 rupees per day per person. This grouse over increased cost and insufficient MSP is not specific to soybean farmers.
The MSP declared by the central government for 14 Kharif crops leaves much to be desired. Much of it does not even cover the complete cost of production, which is being borne by the farmers of India. It's true not only about soybean in Amravati or some other district, but it is true for all the 14 crops, including paddy, cotton, maize, and many other crops.
The complaint of insufficient minimum support price is not a new one. In 2006, the MS Swaminathan Committee had recommended that MSP be calculated using the more comprehensive formula of overall cost of cultivation plus 50%, where the cost of cultivation includes peripheral costs like rent for farmland and any interest paid by the farmer. However, the government uses a more basic formula that takes into account only direct costs like prices of seeds, fertilizers, fuel, irrigation and unpaid labor. Now in March 2020, the government said that it considers calculations using both formula to arrive at the final MSP and was confident that its MSPs would boost farmer incomes. Farmers, however, say that in reality, this won't happen. In Amravati, with camera person Milind Wagmare, Santiagora.
Okay, that is the ground report, sad state of affairs, but brought to you by CNBC-TV18. But with that, we will take your leave on this edition of Power Breakfast with the news that the SGX Nifty is indicating a start in the red for our own markets today. Stay tuned, Bazaar Morning Call comes up next.